Hi, everyone, and welcome to another incredible episode of the Market Pulse podcast. I'm your host, Matthew Pohl, and we have a lot to cover since the last time that we got together and did this. So, want to jump in, give our quick disclaimer, and jump into some of the things you might have missed in the last couple weeks. All right, so just going right into this, I want to step into our snooze you lose section. Now, the snooze you lose section is where I bring you the latest in news around market movements or things hot and happening in the market that if you weren't watching, you likely might miss. And that could be everything from new bull runs, new bear runs, moonshot moves, political landscape things that may be happening that will affect certain currencies or certain asset classes. And in this episode, we have no choice but to cover what is going on in Bitcoin.
Breaking news.
What you're about to see may disturb you.
So let me bring up the screen really quick here. I want to show you the latest. And let's dive right in. All right, so here is Bitcoin, guys, and I just pulled up my charts on BTC USD. This is the current price here on the far right, and for those of you who've been snoozing a little bit, you might be surprised by this. Looks like current price is sitting at close to 88,000 a coin. A little above 88 is where it looks like it's 88.87. And you can see in the last day, we have hit all-time lows since November of last year. In fact, you can see this level here at 8,600. It hit today, coming off of a high of 109. Now, this is a significant drop, nearing 20+% in terms of a market correction. And for those of you who have traded Bitcoin, know that this isn't uncommon, where you can see highs to lows and kind of a wavering pattern that kind of goes into a short-term bearish movement and then takes a climb after a period of a cycle. This cycle from the last year, and I just want to show you some technical things happening with Bitcoin, and then we'll get into the fundamentals around like why I think this happened today and contributed into today's bear move, although I am still relatively bullish on the coin itself. And so it merits the question, after taking in all this data, is now the time to start buying the dip? Is now the time to start positioning in? And I'll talk about some of the danger zones technically that I'm seeing on here, but let's just talk about this really simply so that my listener-only view or my listeners-only audience can get the same amount of value out of this content. So I'm going to kind of explain what I'm doing as I'm also visually showing you this for my visual listeners and viewers. Now, if you go back into March of last year, we were sitting at right about the $73,000 range with Bitcoin being the high. But if you actually took the channel or the trend, let's say, going all the way into November, that trend was actually bearish. It was not bullish. And these are what we call flag patterns, where you have a large spike and then you have sideways movement in the candles, and it looks like a flag, right? It looks like something hanging off of a pole. Well, that went on after the last hype cycle that went from like 27,000 all the way up to 73,000. Then we had this long sideways movement that happened for like, what is that? From March to November. So we're talking like 7 months-ish. And then something happened in November of last year. As you guys know, there was a lot of ETF adoption. There was also a lot of stuff around inflation not cooling, political tension, global tensions. And we started to see this climb where we went from kind of an average price point of 65,000 to a new high of 109,000. That's like almost double the price. So naturally, we're going to have some retracement. We're in another parabolic cycle in terms of Bitcoin price. And there's kind of this momentum that has to build up before we have the next major climb. And there's some fundamental things that happen globally that kind of influence that. But today, you will see that at 88,000, a lot of people are going, oh, maybe now is the time to buy back in. Well, because of the wick that you can see on today's candle, meaning like the all-time low of today's price versus where we started at $93,000 today. It went all the way to 85, 86,000. So a significant drop in the overall price. And then it bounced back up right into those 88s. But if you're to look at the price since November, you can clearly see that we are in uncharted territories, anything below 88. And so let me tell you some like technical data that would have me concerned about the price going into what I call no man's land. The price between 73,000 and 88,000 is what I would call no man's land. And in order for us to be in a new trend that would likely have us continue in a bear cycle, in other words, have the Bitcoin price continue to drop all the way to what I would say is a floor of 73,000, you're going to have a day open below this 88,000 range. It's going to have to like open up in this no man's land. And if the price settles in here and this support that we have right now at 88,000 turns into resistance and the price stays below it, this will be a very fast and likely downturn all the way to 73,000. Now, that does not change my outlook on the overall price of Bitcoin. It's just how the technicals work. It's how large hedge funds start positioning, banks start positioning inside of this, options trading will obviously influence this. It's really a technical race at that point. But this fundamental thing that's been happening has likely fueled this this bearish market in a way that I don't think we were seeing or expecting to happen with such volatility. And let me kind of just share what's happened. So Bix, if you guys haven't heard of Bybit, it's a company that is Dubai based. It's a currency exchange, huge currency exchange, founded and formed in Dubai. Just 4 days ago, had the largest hack in crypto assets that we have ever seen. And what happened was we thought unheard of. It was a crypto wallet hack among all users on the I don't know if it was all, but an immense amount of users on this exchange. And the total amount of crypto stolen was $1.46 billion. And you can see in this chart that this is more than double the second largest heist, you could say, of crypto of all time. And this is kind of a fun chart to see, but the Poly network had a $611 million hack. The BST token was 582. Ronin had a $540 million hack. Coincheck had a $532 million hack. FTX was, when you look at all this, was only a $482 million heist. So this definitely sets the new precedent for the most money stolen in crypto assets. And there is no question, not because of the hack, but the sentiment around what the hackers are experiencing, like the victims of the hackers are experiencing, that's causing the price to drop. Meaning that our confidence in crypto in general has dropped, although the integrity of Bitcoin has not been challenged. There's been nothing that broke with Bitcoin. What happened is the security protocols for these wallets was broken. Now, the Bitcoin worked fine. It got stolen fine. You know, it would be like saying that when a bank goes bankrupt, or when a bank loses money or closes its doors, that we should have that mean that the dollar is losing its value, or whatever assets were stolen inside of the bank somehow lost their value because the bank got robbed. No. The dollar is fine. The dollars that got stolen from bank still work. The crypto assets that got stolen in this heist still work. But the security protocols clearly didn't. And so all it's doing is it's just contracting the confidence in the overall market, where security protocols, guys, will solve this. And actually, I have a segment where we're going to talk about this Mariana one card or chip that is likely going to create incredible encryption and security protocols, specifically with AI, but also in blockchain, in terms of like creating new levels of encryption that would make this almost next near to impossible. So we have tech coming that's going to fix this. Real assets with real value, I foresee seeing a restoration in their all-time highs and surpass. But this is obviously a major setback, and the market is feeling it as a whole, where there were billions and billions of dollars that moved out of Bitcoin because of this scare. And you just have to get that this is very common. For people who don't understand Bitcoin, this is new. We saw a large withdrawal from the ETFs because these are people that don't understand the tech. These are people who don't understand what's really going on. And they're worried that, like Bybit, that maybe their exchange at JP Morgan or their account at Fidelity that's through an ETF somehow would have the same risk. And it's my opinion that if you had your money in an ETF versus one of these exchanges, that you would obviously be much safer in a U.S. regulated exchange or a U.S. regulated banking system or investment firm that is using an ETF to buy these, where those assets are really secured up, guys. I'm not saying that Bybit, didn't do a good job trying to protect themselves, but the reality is the reason they got hacked or the rumors of why they got hacked was that they got some type of phishing scam and they accidentally sent the money based on a request. So this was a easily avoidable security protocol. This was not like some glitch in the Bitcoin protocol. This was not some glitch in crypto or the assets being held. It was an exchange failure. And as things progress, we will likely see more and more security protocols. And this is an answer to those who want to go foreign with their assets and why it's so valuable to bring those into the US. Meaning it's just safer here. It's much safer to be doing those transactions local. So what do I think about Bitcoin? I think we are going to likely see a similar trend as we saw last year from about March to November. If you're to copy and take this entire thing over, I'm just going to kind of layer this on top and widen it a little bit. You would likely see the same things. Let's do it like this, actually. You'd likely see the same pattern clear until about August. I would say if we drop below 88, those prices are going to go lower, and this curve is going to like come down in terms of the trend. The bearish trend will drop. But I really believe that 73 is a strong support level. If it goes below 88, when it hits 80, this rounded number, there's going to be a lot of support that bounces from that. If it breaks through that, 73 would be my bottom. Is now a time to scale. I'm personally not scaling in. It probably wouldn't be a good idea for me to disclose my positioning on this. But as a general rule, if I were to start scaling in again on Bitcoin, I would wait for a candle to set up below 88. And then I would take a percentage of how much I would want to put in. And at about every $3,000 to $5,000 drop, I think that's fair. About every $3,000 to $5,000 drop below 88, I would scale in a certain percentage all the way down to 73. So there's a lot of people saying now is the time. You can see that a lot of people did jump in at 86. However, it's my belief that this sentiment likely isn't going to change anytime soon. And I would put a pin on the date on this by Friday of this week. If by Friday this week, the price has held above the 88 level, everything I've said about a continuing bear market and scaling in below 88 is null and void, meaning like things have changed. And clearly the sentiment behind this this heist has gone away, and people still believe in the coin itself, although maybe the exchange was a bad move. All right, so there is Bitcoin in a nutshell and a wrapping up of the snooze you lose section. Up next, we effed up is the next segment we're going to go into. So let's prime this and get going.
We f***ed up.
Now, I couldn't think of a better thing to cover during this segment outside of all of the chatter, all of the rhetoric, all of what's actually happening in this Doge department. It feels like a headliner every morning I wake up. And no, I'm not just looking at my feed. Doge has become a household name. Elon Musk is a global name. And what he is doing in Doge is nothing short of incredible. And I know I'm going to get a lot of people who just are anti-Elon followers, anti-Elon enthusiasts, that it just doesn't matter what he does, they don't like it. But the reality is, and I just want to have this set in for a moment, the reality is, if it were Elon, if it were your sister, if it were your best friend, I wouldn't care if what the end of the day meant was the money I pay in taxes, which is all of you. There's no one exempt from paying taxes. You pay it at the pump. You pay it when you buy a soda. You pay it in your taxes. You pay it when you make money. You pay it in your income. You're paying tax everywhere. And federal taxes roll up into federal spending. And at the end of the day, most Americans that I've asked, and myself included in this, don't feel like we have a good grasp on where that money is going. In addition, we also have been joking. In fact, it has been a joke since I was growing up around how efficient government work and workers are compared to the open market, compared to free market. And there are little jokes that I was told as a kid around this. So it's not like this is news to anyone. And I get it. Like, if you're stuck in this privilege where you're a government employee and you're at jeopardy in one of those departments that may not be a necessity for our country, you may have some stifle with this. You may have an issue around this, as this would largely impact maybe a career you've been in for a while, or something you've invested a lot of time and energy being in. But the reality is, even if you're a government employee, most of us would agree we're not happy about the efficiency around how money is being spent. And so I thought we would take some highlights of some things that have happened in the last week that the Doge department has discovered. And it's like, you guys, you can argue about whether Elon has the authority to do this or not. You can argue whether they're doing it the right way, or maybe they're taking too large of a chop at this, or like we're not being careful enough. But how about we just start with the fact that we're doing it at all, and that the only thing comparable to this that we've ever done, which I lived through, and Clinton was my president at that time, was President Clinton. And Clinton did something very similar to this and balanced our budget for the first time, was probably one of the greatest presidents of all time in terms of being able to balance our budget, and put us into a surplus for the first time ever in my lifetime. And since then, we've never been in a surplus. We've never had to, but we have been like a bad company who's overspending, and we're running out of mileage. We're running out of runway. We are running out of debt. And at some point, we're not even going to be able to service our debt. It will cost us billions of dollars just to service the debt that we already have. In fact, we're nearing $1 trillion to service the debt we have. And frankly, we just don't have that money. We don't have enough GDP to do that. And so it's like, we got to take a long look in the mirror. I get you can hate Elon, but it's like having here's a good example. It's like having a coach who really drives you to the championship, who really drives you to winning, but you really do kind of hate the guy. You hate him because it's hard. You hate him because he makes you do, workouts twice a week. You hate him because like it's not going to be pretty. He's not telling you everything you want to hear. But at the end of the day, our country, our value of our dollar depends on this happening. And if you value at all the money you may have in a bank account, if you value at all any of the assets you've accumulated over time, if you value at all where your kids will be in this country 10 years from now, 20 years from now, if you are bothered at all by affordability, if you're bothered at all by inflation, this should be the number one topic that you should be looking at. This is likely the largest contributor to your quality of living, is how the government taxes you. And inflation, by the way, being the largest hidden tax. We, as Americans, got taxed more during COVID than we've ever been taxed, ever, because we had not only the highest taxes we've seen in this country, we also had inflation, which is a hidden tax. It's basically saying, I'm going to lower the value of your dollar and still tax it at the same rate. And so we got more, but we got less buying power for it. So anyways, let's dive through this. That was my rant. The Doge Department. Some fun things that were discovered just this last week included $10 billion in empty office buildings. And I find this laughable because I remember about 6 months ago talking about office buildings in Utah that are also empty. So hopefully this is a model that states are looking at, because I'd also like my state taxes to start going down. But this is going on all over on a federal level, where there are just literally blank buildings, where we sent so many people home, where even if we brought all the people back, we still have a third occupancy and space, and there's just no efficiency in how we're spending on these old buildings, and there's no accountability. $2 billion from the housing and urban development misplaced. So there was $2 billion. I don't know if you guys saw this on the news, but there was $2 billion that just got misplaced and like discovered. It was like how do we just misplace $2 billion, guys? It just happened. And we found it, and with the help of Doge, they helped discover it, and now they're going to do something about it. $20 billion sent to climate control activists. Now, I'm not saying we shouldn't be environmental. I'm not saying that we shouldn't put money towards making sure we're taking care of the planet that's taking care of us. But these aren't like groups that are working to actually plant trees and lower emissions. These are like activist groups that go out and petition. And if you were to hold like, what did you accomplish with this dollar amount, you would actually be shocked at how little. Federal credit card spending. This was a fun one. They found that we were spending $40 billion a year on federal credit cards. So you would imagine these are the credit cards of government employees. And you'd think, like a business, that not everyone would have the authority to have a credit card. In fact, I know a lot of government employees, and not all of them have credit cards. But the shocking piece of data is that there are more credit cards than total employees. 4.6 million credit cards that are generating this $40 billion in spend. And as they started to go through the data, the Defense Department showed a recent audit that 12% of travel charges violated their spending policies. So we have government employees with credit cards, and you just know, I mean, come on, guys, let's just be honest for a minute. Like, you know that they're spending and fluffing stuff that they're not supposed to be spending on. In this case, travel. It's like, oh, well, I'm only supposed to spend money on the actual travel and the hotel. Maybe that's the rule. And it's like, well, then while they're at the hotel, they're getting snacks, and they're charging movies, and they're getting their, entertainment and drinking for that night taken care of. It's just like, you can just imagine. I mean, it doesn't take a lot of creativity. And I think anyone who's watching this and listening would go, yeah, like that's totally what's happening. And this is just the Defense Department. Like, imagine what's happening among the millions of other credit cards and probably other departments that are have far less oversight, far less accountability, and we're just kind of scratching the surface. So I get really excited when I hear about the money that I give the federal government every year actually having some accountability. And I don't think any person, even if you're not a citizen, there's still money that you contribute to our government through taxes. And to know that if you're taking advantage of like public services or parks or the roads here, that like you're actually getting some of that benefit, and it's not just going to wasted causes that frankly no Democrat or Republican would agree with, period. Yes, we might find that the people that are arguing this the most, the people who are complaining about where the money is going the most, are likely the benefactors. And I actually don't think it's the employees. I think there are millions of dollars funneling to politicians, lobbying groups, people that have finagled their way into the corners and crevices of government money that frankly don't want to lose that privilege because they don't have to account for anything. The U.S. Treasury found $1.9 billion in fraud and abuse with Doge's help. Guys, the list just goes on, and every week there's like something new that comes out. And so, yeah, I get that people are a little alarmed by how much is coming out. But like, frankly speaking, if you're just an average Joe like you and me, and you're not some elite or politician up in DC, I don't get how this is a bad thing for you. And I would love in any of my comment sections to understand that. Other than you might work for a department that frankly does not provide that much benefit to our country. And if our country is going bankrupt, we have to make some cuts, and you may be a part of that. And I get that, and I'm sorry. But the reality is you will likely be better placed in the actual non-government workplace. And that area of work, we get way more GDP out of. We get way more production out of. And frankly, I bet there's surveys that show this, but I would imagine people who are in the free market workplace versus government workplace are much happier because they actually have goals. They actually have milestones. They're actually held accountable to futures. And there's something about being a part of something that's winning, being a part of something that's doing well, and like knowing that I'm growing as a person and an individual that actually creates happiness. And I imagine that those who leave these highly unaccountable organizations and go back into the free market workplace, I would imagine a year from now, you're going to be like, that was the best move that ever happened to me. All right. So shifting gears a little bit, we have had one of the largest breakthroughs in quantum computing. One of the largest. And it just happened this week. And those who are participating, those who have been in the research and the gathering around this new way of quantum computing, everyone outside of Microsoft is scratching their heads wondering how they did it. So I want to introduce to you in our What the Nerds Are Doing and what they're up to, Mariana 1.
Rock, paper, scissors, lizard, Spock was created by internet pioneer Sam Cass as an improvement on the classic game Rock, Paper, Scissors. All hail Sam Cass. Hail.
Here we go. So Mariana 1 is a new form of computing that is shaking how we do quantum computing. And the breakthrough, let me just kind of break some of these components down and like what is going on here. So the technology is coming from Mariana Zero modes. And this was an idea that was theorized way back in the 30s, which the idea would create a much more stable way of computing on a quantum level and scaling computation, quantum computation, in a way that is like completely unfeasible to like the human mind. Like we're talking a million qubits on one singular chip. Now, how is this possible? Like, what is going on here? Well, there was a thing that happened in physics where we have just discovered a new way of computing through this new form of physics. Let me explain what's going on here. So, Mariana 1 is the first quantum processing unit that is powered by what's called topological qubits. Now, topological qubits wasn't possible until just recently. And what's happened is they found a way. There's no like white papers on this. There's no like things. In fact, other people are asking how you did this, and Microsoft is saying like, we're not going to tell you. But what they have disclosed is this topological qubits breakthrough. What makes this all possible is they were able, in like this sub-zero coldest environment creation, like they created these containers that like bring temperatures to like the lowest possible temperature we've ever seen in production for computers. And it literally has created they've created a new material. Like we're like changing physics. And in order for this topo conductor to work, these new materials allow for superconductivity and this new state of matter that only existed in theory. Like we didn't actually think that this existed. And the advance stems from Microsoft's innovation in this design and the fabrication of gate-defined devices combine this semiconductor that we couldn't have had otherwise. And so to kind of break this down to the common man, typically we had like a linear function, and we've kind of had this evolution in semiconductors where, you know, even at the beginning of time, the way that we used to do computing was with like sticks, and like then we moved to like calculators, and that was using ones and zeros, and then we went into like higher states of computing, and the superconductor, this quantum computing was like theorized and we thought was possible, but now these ones and zeros can be stacked, and we can have up to 1 million qubits in a single conductor. And what this allows us to do is solve depth problems in a way we've never been able to do in a singular computer. Now, we don't have, and they're not using this chip yet inside of a computer. That's what's coming next, is to build out the actual like how to use this chip. But the technology is there, and we are like in the next. It's predicted, in the next 2 to 4 years, we're expected to see the first functional, large-scale quantum computing chip that is integrated with this Mariana 1 chip, or maybe the next one that comes around that's a little improved. But let me just share with you like the impact of this. I think that's where it gets exciting, and hopefully we cut all that down to a short abbreviation so you can get to the exciting part. So how does quantum computing accelerate advancements in tech like AI and material science? Well, in the AI space, it's going to speed up learning, like machine learning, on a quantum level. It's going to inspire optimization, meaning like costs for learning, optimization routes for answering. Like once you have an MLM or a large language model, an LLM, or some other model that's like AI trained for whatever you happen to be doing, it will give you and run scenarios of like how to navigate this in the fastest way possible for energy uses and efficiencies. It will also help with synthetic data generation in AI models. So synthetic data is so valuable. Like when we had like COVID, you could take a virus and take a quantum chip to autonomically like evaluate its properties and like what would work and what wouldn't work at a speed where you could come up with a vaccine in like 2 days. So this will largely impact material science and chemistry, where you'll be able to simulate molecular structures at a rapid pace. It's very likely we, because of this, will come up with completely new elements, completely new materials. We will have access to new drugs. This will blow up the pharmaceutical industry for good and bad. We'll also learn a ton about effects, and studies will kind of become irrelevant when there's actual material data. And this idea of modeling a best case scenario, when I go, hey, build me a rocket ship with the optimal, XYZs in order to get me to Mars, rather than having to do version 1, version 2, version 3, take data, recycle, extrapolate, and then reuse and redo, you could likely, with a quantum computer, get it right the first time, which is like completely game changing. To think that innovation, to think that technology, the inventors, the creatives could put something out and go from beta, meaning in their head, to a version that works perfect the first time. And so this is a major step, guys. And I would imagine the markets are going to react to this. The fact that Microsoft figured it out, it's very likely that other companies will follow that are in the quantum realm. And so placing bets with quantum computing will likely be something that chips away at the overall AI investment, because you got to get, these are two different realms. Like quantum computing and like NVIDIA computing, let's call it game card computing, or processing, are two very different things for two very different processes, okay? And they both have a place and they commingle. They both also overlap on top of each other. But in terms of like AI solving all problems, that's just not true anymore. And it's also not where we've seen the largest innovation, where as we see applications, real life applications, use these quantum superconductor computers, the innovation that will likely come from them will go, oh, we miscalculated AI. And some of those resources really should be going towards quantum. And so if you're looking for moonshots right now, I would be looking in the quantum realm. I'd be looking for companies that look like they're on the precipice of getting to something like Microsoft. You can guarantee now that they have cracked the code that there will be people in the space that start coming out with versions or ideas that this actually works. And I'm not saying like Intel gets leaked, but Intel does get leaked, and it's very likely we'll have a competitor pop up here shortly. All right, exciting time to be alive. It seems like every week there's just like some new technological advancement that's going to change mankind forever. And it's kind of sci-fi. Like we're living in the quantum realm now, and we're actually doing quantum computing, which is bizarre. I want to migrate over. We're going to transition a little bit to one of my favorite subjects, and that's real estate. And I'm just going to give you some light news updates of what's going on in real estate that might impact you, some things that might be interesting. And so we're going to segue into what I call our Baltic to Boardwalk. I want to talk to you a little bit about the new limited FHA loan that just hit and is fresh off the market. It's a federal program, and if you are a homeowner or buyer, this is likely something you want to know about. The type of loan this is usually around a cap of $75,000. And this is a loan for minor repairs and cosmetic improvements inside of a house. Now, the house can't be 75. You can't use this for a new home purchase. And standard FH loan, it has separate limits, right? We know about that one. The standard FHA is a federal loan given by the government for a first-time home buyer. Every county kind of has its own limits. But in addition to that, there's this new limited FHA where if you bought a home and you want to do some improvements, you can go get a federal loan now up to $75,000 to replace carpet, paint, maybe put a new roof on it, to help preserve your asset, your real estate asset. Now, just some bullet points on this. This is not something that investors can use. This is for the actual homeowner, and so there are very strict requirements. There are very strict requirements around it being a homeowner only. But if you are, it's good to know. In correlation with this, I want to move over a little sideways to what's going on with rates, because there's a lot of sentiment right now that people think I'm going to wait to buy a house until rates drop. And if you've been waiting and you're one of these people, or you've heard of people that are doing this, you've likely seen that not much has happened. And there's kind of this illusion, maybe call it delusion, around what's going to happen with rates. And so here's the reality. Here's a chart. I want to show you actual rates. So this is the actual Fed rates. And you can see that from 2022, the climb happened all the way from almost nothing, almost free lending from the Feds, to over 5.5%. Now sitting right at about 4.5%. We've had about a full percentage drop. The increments are getting smaller, meaning they're only doing like quarter point drops. And everyone's wondering, when are rates going to be back where they were? And the simple answer that no one likes to hear, that I've been arguing with people for years, is they're just not. They're not going back. Not for a long time. And I said that a year ago. I said that 2 years ago at the beginning of 2023 when people are like, oh, this is just short. It's going to spike and it's going to drop right back. And it's like, no, we are in the middle of a financial problem with the dollar. And until that gets fixed, and until inflation slows down, and maybe Doge actually does their job. By the way, if you're trying to buy a house and you're crying at Elon Musk about the Doge department, like, the joke's on you. Like, it's actually comical. Like, you think rates should come down, but inflation should stay high, that politicians should just be able to spend as much money as they want. I mean, that's kind of your vote. Well, most of America voted to cut this down. Most of America voted for Trump, both, by the way, popular and electoral. So if you're feeling left out, you're feeling like, oh, no one likes him. No, most people wanted this. Because what he stood for, outside of, him being kind of a bully, him kind of like having some personalities that, frankly, I wouldn't my children to look up to. We know he's a good businessman, and we know that he's going to get spending under control. And that's what we voted for him to do, and that's what he's doing. But the impact is rates. Like, if we can get the government to actually lower spending and actually cover its debts and actually make the dollar more attractive, guys, your rate's going to drop. It's going to come down. It's going to get better. Inflation will slow way down, and then we'll have to pump stimulus or quantumly ease the market so that we don't go into deflation. And so that's what we're seeing right now, is that hasn't begun. We haven't seen the impact of Doge. We're just seeing the highlights of what is. There's actually been no major movements in terms of cuts in spending, but we're being very well educated on it. And as spending drops, rates should also. And there is a strong correlation around that. Here's a chart that shows mortgage rates. I thought you guys would be interested to see this. And it ranges a 30-year anywhere from 6.8% to 6%. So if you want rates to come down, guys, if you want inflation to cool, we've got to get our country under control. And I'm speaking to my Republican reps, and I'm speaking to my Democrat reps. Like, we got to knock it off. We've got to cut spending down. Otherwise, guys, you pay the price. The average American pays the price. And frankly, the elites don't care because they're not getting mortgages. They're buying their homes cash. Or if they are paying a mortgage, like 6% just doesn't bother them. But to the average American, that's a lot. And we're feeling the pressure. It is a problem. And I think I speak for everyone where it's like, I would like my dollars to be spent on me and the things that matter to me, not these billions of dollars to ancillary ideas that neither sides of the aisle agree with. And it's just waste, especially when it's getting sent out of the country and we can't even take care of ourselves. Here's the inflation chart. As you can see, like we talked about, the spikes that happened from 21. We started raising rates in 22. And you can see inflation has come down. But this chart actually really proves my point. That we're still sideways from an inflation standpoint at about 4%, just under 4%. We dropped and almost hit 2. It was just like right above 2. And then we've slowly been inflating again. And so we like 2%. The Fed's target rate is 2%. And the fact that we haven't dropped below that at all is scary to the Feds. And so we're not going to see rates drop until we see inflation drop. And the only way inflation drops is if we stop printing money. At least that's the thing that caused the most impact in inflation over COVID in the last 4 years. All right, so I don't think this is a topic anyone's happy about, but when it comes to rates, rates affect everything. And there's an old trader saying that's called "Don't fight the Feds." So if you're buying thinking that rates are going to drop, and whatever market or thing you're trading is dependent on that, I would recalculate and recalibrate. If you're trading something you think rates are going to go up, I would recalculate and recalibrate. My prediction is it's going to go sideways for even longer. And we might see small drops, but they will be pretty insignificant in that you're not going to see your mortgage rate drop much. So if you're thinking about buying, I want to share the market impact of this. You're probably going to step in. And because of that sentiment, because of that realization, the real estate market as a whole, guys, here's my takeaway. The real estate market as a whole is solid this year. I'm not saying for next year, but for 2025, it's solid. And it's all baked in. And it's baked in with rates, it's baked in with supply, it's baked in with demand. And the biggest problem that's likely going to inflate housing prices again is the thing that was keeping people from buying is they thought rates were going to come down. And this is just the new reality. So there's major market opportunity in smaller homes because rates are higher. When people have to move, they're going to get less for the same price. And so there's going to be this large migration as we move homes or buy new homes that the price per square footage will be higher and the amount of square footage we get will be lower this year. But because of demand, pent-up buyers who have been waiting and finally waking up to this realization that I'm talking about right now, we're going to see those buyers come into the market for the first time and finally make their move. And some of these buyers are very sophisticated. They're not like first-time home buyers. They're just like, well, we'll wait to get that vacation home. Well, we'll wait to buy our second house here. Or, oh, we'll wait to do this with this market. And I'm saying this in consideration of other markets kind of imploding. Like we're seeing the Airbnb market start to show its cracks. We're seeing commercial real estate show its cracks. Those being somewhat having network effect with an overall real estate market, I would say that my position is still the same. I think we're going to see rates right where they're at. You might see a 1/4 point drop in your mortgage, but it's not going to be 4%. It's definitely not going to be 3 or 2. Like that, those days are over, guys. And because of that, you're going to see new people entering the market, which really makes the real estate market interesting as an investor, at least for 2025. All right, well, that pretty much wraps up my short time with you guys. I hope you got a lot out of the message and the podcast from today. I'm excited to bring some of the latest in tech, but also in the market to you. And you guys be safe as you're trading out there. Make sure to follow my handles and hooks. Give me those thumbs ups and likes as I'm doing my spammy call out for fans. And yeah, I just want to appreciate or share my appreciation for you guys, and look forward to having you guys on next week. Thanks so much.